The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach, dear friends. We're off 7.5 points. My monitor, I guess, is broken for the second day in a row because lower prices are just not accepted on Wall Street any longer. And one of the things we've got with that 7.5 points lower, volume, 2.33 billion shares to start the day. We've got some decent volume out here, and we've got a lot of cross currents that may not be showing up in your charts, some things that you need to know, and some answers to questions from yesterday in why I am starting to see these stocks with light volume jump the creek and go lower. I think we have an answer today. And that answer probably says volatility for a few more days. And we'll give that to you. That's what they call in the industry a tease. Of course, if you look at the rest of the markets, we're off, what was it? We're off almost 10 points on the NASDAQ, which is not that much. And, of course, 87 on the Dow. I think it was off about 115 at the lows. It had a little bit of bounce here, but I suspect it's going to be very tough. A lot of stocks out there getting hammered today again. There's always one that's up 10% and then five that are down 5% and then a couple that are down 10%, but we will look at them. In fact, let me put one more on my list because I think it is more important than any other stock out here. Yeah, it's off 11%. We'll talk about that one. It's a three-letter stock. Am I giving too much away? Anyway, we are going to go into the breach once again, dear friends.
That it's all just a little bit of history repeating.
Today in 1996, just 3 days after telling the New York stocks, the New York Times that the Dow Jones Industrial Average was headed for 6,400, stock guru Elaine Gazzarelli tells her clients to get out of the market for a forecast that stocks will drop 15 to 25%, which would put the Dow at about 4,300, helps send stocks plunging. The Dow, which had been up more than 43 points at lunchtime, nosedives more than 100 points and finishes off the day, finishes off 44 at 53.46. And of course, that would be, like off about 300 points today. So it'd be a fairly decent down day. What she did not know was that we had a Fed official out there that was more than willing to build yet another bubble. And he went out there and fiddled at the margins to make sure it keeps going up. And while we can't trust economists who run the Fed, that is because they eventually succumb to the pressures of Wall Street and the people in power, and that's it. But some of this, I think, coincided with additional monetary easing or policy easing because the president was, I think, at the time in, I think this was the same time when they started easing because everybody was freaked out that maybe we would impeach Bill Clinton. I kind of vaguely remember that's what it was, but I'll have to go back and look at it. But I think that there was more than some calming words and cash sloshing around by the Fed because of that time. And that's the one thing you can't ever say. You can say this market left alone might go down, but what if someone comes and jiggers with it? And, of course, his jiggering pretty much led to the blow-up in 1998, which he didn't learn from because he went ahead and made the giant housing bubble in 2008. But it's not anything new to see Fed officials not learning from anybody. their history is always congealed, kind of like one of those horrible things that you get out of a can that says it's meat, but it's kind of like this gelatinous goo, kind of like dog food, but they say it's meat. Probably only one worse thing than that, and that is that Vegemite from Australia. Talk about some nasty stuff. That Vegemite proves that you can get used to almost anything if you've ever tasted it. Horrible. Anyway, we're watching this market out here, and we shall see. Oh, I get to play my little tune here, so let's do that. I like Chinese. I'm going to sing along today. I like their tiny little trees. And they're yang. Well, anyway. You didn't tune in to listen to me sing, or did you? Anyway, today, Ray Dalio, the head of Bridgewater, has dropped the proverbial Baby Ruth in the punch bowl. He says, our views about China have changed. Changed, I say, changed. And of course, there is now no safe place to invest. He thinks the unraveling stock market will kill China's economic growth. And I think the idea that they just threw $2 billion at a stock market that's still only half open is a part of that, and probably won't change anytime soon. But very interesting to see a big man of the street come out here. And it's almost as bad as the Apple deal. You might as well, like I said, say that you are a Tea Party member at an IRS audit. Oh, which we found out yesterday. Did you see that? That they found all the documents proving exactly what they were doing. So it's not just alleged anymore. They found out exactly that the IRS was targeting political parties that it did not like. Anyway, on the China deal here, an endless stream of shills are now showing up saying why it's not there. Of course, those folks are probably stuck in there still for another 6 months, stuck in those stocks that they will not be able to get out of in China. So they've got kind of a dog in the hunt to make sure China stays up for 6 months. So hopefully at that point, China doesn't say yet another 6 months before you can take your money out. But my guess is that's exactly what's going to happen. Everybody around those stocks will sell them, leaving only the big people in there that have 5%. And we'll see what they do after that. But it's very interesting to see the discussions today when he said that. And my guess is he was already out or on the way out when everything went south. I don't think he'd burn the barn down with him inside. But maybe we'll find out later in the day. In the meantime, you can call me at 877. Oh, I'm not done yet. I've got the wrong clock up here. I had it up here for Tom O'Brien's show. We still have 5 minutes in this segment. I was almost ready to go. Anyway, what else do we have out here? Other issues in China that I've been watching and reading about. One of the ones that most people are looking at to see whether China is moving along fairly well is power consumption. They're actually looking at power bills to see how much power China is using. It slowed down yet another 1.3 in the year and 1% in the last month, when normally they start using more in the summertime. It's the slowest expansion in record over the past 30 years for power, which gives you a good indication that there isn't a lot of, especially metal production, which uses huge amounts of electrical power. So you want to take a look at that. One of the other things that I think confirms my theory that we are in deflation and have been for a while, that I think that the United States is in a minor recession. By minor, I mean maybe like 0.5%. We've pretty much gone in and almost through the first 3 quarters. The first quarter. We only need 2 quarters to be technically in a recession with negative growth. And I think we are there no matter what people on CNBC say. I think it's going to be just a matter of time before they fess up to it. But the Australian miner Fortescue Metals reported a 10% increase in iron ore shipments in the June quarter. What they didn't say was the prices had gone down 10% for that same amount that they had shipped. And this is the nasty little truth about what happens in recessions. And that is you can sell more, there can be more demand, and your price still shrinks. And if you read between the lines and look at what's happening in Australia, they cannot stand, just like the countries in the Mideast can't stand to not ship crude, these guys cannot stand not to ship metals. And we have both of them shipping as much as they can in both places. And that may be the best description on why we've got a 6-year low on copper today. We have, 5.5-year lows in gold. And production continues unabated. Nobody's cutting down production, at least not in Australia yet, for copper or the rest. Even if they're getting less, it doesn't matter. It's cash flow to them. It's keeping people employed who may potentially pay income tax. And if you've ever been to Australia, you know that it's monstrous income tax, even if you're just a regular guy. The old deal where we're just going to tax the 1%, the truth of the matter is after 20 years, everybody gets taxed, and heavily, if you want to run a Western socialist democratic style of government, although they're leaning much more back to the conservative side of that line. I warned you thusly.
I informed you thusly.
I informed you thusly. I'm eventually going to bring that up. When Caesars Entertainment went public a couple of years ago, I warned you that this was the poster child for fraud. And the reason why is this was the poster child for sliver deals. Sliver deals are where they put out a very tiny amount of shares. They move those shares around. They make everybody think that somehow this company is worth something, and then they start distributing the shares of it. Caesars Entertainment is very close to bankruptcy after a federal judge refused to protect the casino company from its creditor lawsuits seeking up to $11 billion. That would wipe everybody out, of course, in their stock. And it was easily foretold. You could never short it because, of course, all the people that had brought this company public already knew that it was a scam and which way it was going. They can plead I can even say it, willful ignorance. But this one, kind of like Angie's List, was one of the easiest ones to call. In this case, your only option was not to play the game because you couldn't short it and you couldn't do anything with it, just like Angie's List. So keep an eye on these. But as we learned in war games, sometimes the only way you can win is not to play. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we're back, we'll take a quick check-in. We're off 9 points on the S&P cash, up about 3 points off the lows of the day, and 2.44 billion shares. So volume continues to go well. I suspect that there is a reason for it, and that is the jobs numbers this morning is going to give the Fed a zero cover to not raise rates in September, as they so blatantly said it last week. I think a lot of people are thinking that it is the boy who cried wolf a few too many times. But at the point that they saw these numbers and compared them to 1973, it became more problematic for them to actually figure out a way to duck this. And I don't know what else you could say about it than that. I think we've got a little bit of that coming. We also have some other issues in the markets I said I was going to bring up. Yesterday, I said I'd seen a ton of stocks, mostly in the energy sector and some in the gold sector, go down on light volume and just jump the creek with volume down at the lows. And it made a lot more sense early this morning. I was up probably at 5 o'clock, 5:30, because I wanted to go through a lot of these charts. I'd put on some new short positions yesterday and wanted to put on yet another one today, and actually a couple of them today, and make actually a major call in one sector. And that was a long-term one for my Tech Insider. But it was interesting to me that the discussions, although veiled and vague, were all about a hedge fund in trouble. And this started in the foreign markets, and everybody seemed to know about it, and no one would say anything about it because they're all afraid of one thing, and that is being accused and or sued for causing a panic and or a company going out of business. So there was a lot of veiled this and veiled that, but it looks like there's at least one, if not multiple, hedge funds that were long for the bounce on crude and have been pretty thoroughly crushed. I talked about all the tankers racing for the ports, trying to offload and basically at least kill as the downside they had that was possibly coming as crude went lower again. What was that, a week or 10 days ago? And here's what we're seeing the results of now, and that is that if they didn't outright own the physical, that a lot of these folks were on the wrong side of the actual futures. And they are not going to let these folks out very easily. And apparently, like I said, there are several hedge funds looking out. I think I sent a warning out at about 10 o'clock or somewhere around there, Eastern time, to my subscribers to watch for fast markets because of this and because of energy. I think it was crude was trading under 50 or just under 50 at that time. Let's see what it's trading at right now. Pop it up real quick. 48.28. So it's off 91 cents now. I think it was up 50 cents when I gave it. I'd have to go back. I'm losing my mind, folks. I'm losing my mind. And it is what it is. But you've got to keep an eye on not just the fundamentals, but in the short term, whether or not they can. I mean, normally, when there's blood in the water, there's nothing worse than being in the stock market because they will take you to the mat, whether it's gold or silver. And that may go a long ways to describing why silver has done better than gold out here. These hedge funds may be much more concentrated in gold than they were in silver, and why silver probably held up a little bit better than the rest. It's an explanation that works fairly well, but I did call a long-term friend of mine up in Chicago who worked in the pits for about 12 years, who knows all, sees all, and usually tells nothing. But I did get it out of him who he thought it was, or at least who the rumor is. But apparently there is a little bit of at least smoke, if not outright fire, to this story. So keep an eye on it. Look for fast markets energy in the coming couple of days, because it looks like they're not going to let these folks out, and they will keep pressure on the energy stocks and probably in others until these guys bail out. And that's normally at least a short-term low, if not longer. But there are factors bigger than we can imagine at work. At least I think so. Anyway, we'll be back. Give me a call at 877-927-6648. We got a request in the den. Look at a stock. You can email me at path@TFNN also if you want me to look at something for you. And then we're going to talk about earnings tonight too. Be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, I had a question to look at something up here. I think it scrolled up my screen. And that's not a euphemism, by the way. Where's it at here? I thought it was... why can't I see it? It's got to be right in front of me. That's it. MHK. Let me put that up there. MHK. Take a quick look at that. Mohawk Industries looks like it's completing the end of an ABC up. You had kind of a consolidation move from March 2nd to April 30th. But I'm going to look at this. In fact, if I turn this down, you'll get pretty much what I'm looking at. And that is a fairly decent ABC on the way up. And on the expansion, what are we looking for? 143 is that big one right there. Did a 34% retracement, and what's the 218 is the target for a 1-to-1 out here. So what do you? Well, you got 16 more bucks conceivably in it. Now, one of the interesting things is, of course, this is a Buffett stock, so usual rules don't apply. He owns so much of it that he can drive the price anywhere he wants to. I just stay away from him because it's dependent on his whims and whimsy as to where these things go. I've never been very successful shorting stocks, even when they are incredibly weak, because he's more than willing to sit there and buy away at the highs, enough shares every day to keep them stuck up there forever. But could it go to game? Certainly could. When you own all the shares or most of the shares are enough to have controlling interest in it, I lose interest. If there isn't a robust open market for it, and Mohawk is one of those. So I would just be warned, if you like it on the upside, volume is very tepid so far from that April 30th low, but what else can you say? After the bell tonight, we've got Amazon, which is going to be the big one. I suspect Amazon is probably not going to, at least looking at the options, it doesn't have anywhere near the expected move in it that Google did. Google was, what, 480 to 680? It was hard to, or 670. It went higher than that, but it was, we talk about a huge range. Amazon does not have it. Amazon does have a couple of problem issues. One is that they have a direct competitor now coming out. It opened up its doors on Wednesday. It's unclear how much competition they will give Amazon, but it looks like it's well-funded and well thought out. I checked it out. If you want to check it out, it's jet.com. And that's the first chapter of Amazon's problems. The second problem comes into their AWS service. We'll be talking about it in the Tech Insider hour tomorrow in the Tom O'Brien show in the 4 o'clock hour. And the issue with this is that Google is coming after what is one of their biggest growth and money makers, the AWS service. They are doing something different than Amazon's doing, and something that Amazon does not do at all. And we'll talk about it in that 4 o'clock hour. But I have a feeling, especially with businesses, this is going to be incredibly powerful and be far less expensive than Amazon's service, and be useful in very specific purposes, but widely. And I think a lot of people just haven't written about it probably over 2 months ago when they were doing a beta version of it. This is Google, of this new cloud system that's different than the rest. But like I said, we'll talk about that tomorrow in the 4 o'clock hour of the Tom O'Brien show, when we normally go long-winded about technology. Other stocks after the bell is Altera, which is not going to tell us a lot because, of course, Intel is buying them. Amazon, AT&T, I don't know if we can see a lot in there. Capital One, probably not. Maximum Integrated Products, probably not a big deal. Pandora Media is going to be out. Question is whether or not they're an ongoing concern. They look like they're going bankrupt, and I don't know if there's any way to even say that they won't. Of course, in Apple, in a related story, as they'd like to say on the news, Apple, of course, having some issues, and everybody's kind of just ignored it so far, but they've gotten a bunch of subpoenas for their music service, and it's about the restraint of trade. We talked about this maybe 4 weeks ago on the Tech Insider, and that is where Apple was trying to talk music labels from re-upping with people like Spotify and Pandora. And we already knew just how horribly illegal it was. And if you think that they got their hands slapped for the ebook issue, this could be a lot worse, because this will be the second time that they've been in front of probably the same judge. And that judge will not take nicely to it. She's already put up with, she was pretty ticked by the time she got done with Apple last time on the ebook thing. And she's been dealing with them on Samsung. And my guess is it's going to end up in the lap of the exact same judge once again out there in San Francisco. But they were trying to talk people out of giving rights to other folks, saying that they would pay a little more. And that's just, I mean, it's just blatantly illegal. If I would have done that as an individual business owner, I would go to jail. But because you're Apple, guess what? You're going to probably pay a fine. It's unclear whether it even worked or not. And, of course, it's not a moneymaker for the company. So the whole thing is kind of a loser. It's kind of like the ebook thing. You know, they ended up paying $500 million fine for all that. Do you think they ever made $500 million selling those ebooks? I don't think they did. And that's where these things are weird, that they just don't make a great deal of sense, especially for a CEO who used to be a CFO, who should be more fiscally responsible. But that will it. That takes care of MHK and 2 large caps. Okay. What else do we have out here? Netgear could have a big move in it. Pandora. Skyworks Solution, of course, this got hammered the other day with Apple in sympathy and bounced back up. They are a major supplier to Apple. In fact, 80% of their business is Apple. And that's where this stock becomes so problematic. What I will tell you is that this is one of the stocks, handful of stocks that we talked about about Apple in the last couple of days, that will give you an idea of whether Apple is ready to crack or not. It certainly did not look very good at going into earnings. You had a little pop out here today, but again, there's not a lot of volume. When we get these earnings for Skyworks and their forward-looking statements, it will be very interesting. And the issue will be that they'll say everything looks great. The reality will be somewhat different, because Apple can go halfway through a contract and then opt out for the rest. There are a bunch of parachutes and trap doors in the contracts that Apple has with its suppliers. So as far as Skyworks Solutions it knows that it's going to be supplying a whole bunch of parts. It scales up. It hires people. It builds stuff to make maybe 10 million, 20 million, 30 million parts for the next iPhone launch. And then they have to figure out whether Apple will ever screw them on this, and to say, hey, we really don't need those parts or not, or we don't need as many, in which case they may have built up more than they needed to supply them. This is going to be, or these are going to be the first ones that turn. At least they were when Apple hit its first major high. That was what? Split adjusted $700 or whatever it was. These all immediately turned down. In fact, I called it on the Tech Insider Hour one night and sent out a special when they hit the first top. But all of these suppliers were the first to majorly turn down when Apple had a problem. They are at least weak. They aren't strong. They are not projecting yet the kind of weakness that we saw at the last major top in Apple. But they are not strong. So we could start seeing a little bit more weakness. I think that 115 on Apple is going to come far before the test of 134 again on the high side. That 115 in Apple looks very, very, I know a lot of people wanted to barge back into it over the last day or two, but to me, this thing is just ramping up for that 115, where this thing gapped up on the 28th of January. Did so on 146 million shares, but I'm pretty sure this thing's working its way back down there. Everybody will come out and push the stock and tell everybody how it's going to the moon as it slowly drifts back down to 115. My guess is it'll get 115, and that's when the next iPhone will come out, and we'll probably see a bounce out of it then. But I'm looking fairly close, thinking this thing it's got probably about an 80% chance of hitting 115 before it hits 134 again. So we will look at it that way. Have plenty of time out here. You can email me at path@tfnn.com. I think we got a couple of them. Got a couple of emails here. Let's see out here. What else do we got? Okay. Oh, I get to retire. Somebody from Ethiopia has lots of money for me if I just give them my bank account number. Anyway, what else do we have going on out here? We'll look at a few other stocks on my list. Very interesting to see a lot of these stocks continuing to break down when they didn't look that bad. And again, this is, and I continue with this theme, but I was looking at potash yet again. It's hitting some recent or some long-term lows. Let me go a little bit farther back and going through them today and going lower. And this is, I guess, a theme from Caterpillar, which had earnings, and looked fairly horrible, continues to look in this kind of industrial world, continues to look horrible. But when we look at here today, not a lot of volume, but continuing to go lower than what should have been supported in that 28.5 level. Not a lot of volume out here, but these stocks have not been bouncing right back in. They've just continued down like the energy stocks, which is most problematic. The energy down on this last leg from February 19th's high also pretty vicious and doesn't look like it's going to stop anytime soon. And one of the ones I liked out here, let's go back and look at it, in this was Intrepid Potash. Another one that's busted through the lows on very light volume and it has not stopped. And this is a theme I talked about yesterday. Could this be part of the bigger hedge fund problem, China liquidation? It's hard to tell. It's just stocks are not operating correctly to the downside, and the wheels are falling off of some of these and a great deal of these. What were we talking about? I thought I was going to bring one. Oh, Caterpillar. Of course, Cat came out. Another bad did a bad thing. But it's down, and it's below its major previous lows of January 29th and March 13th, and lighter volume. You know, basically had 27 million shares on that January 29th low. Got 10 million shares now, but it's going to close below it. And if I just look at the rest of the industrial sector out here, the energy coming down was lower. The volume down here is lower. And guess what? All these stocks continue to trickle down lower still. But the last 2 days have had significant volume, not as significant as that January 29th low at 78.81. But again, problematic at best. These things would probably have a day or two to close back into the trading range. It's just I continue to see very few stocks at the lows that are doing this. At the highs, everybody's jumping into and all over stocks like Apple and the usual four horsemen of the apocalypse. But it continues to be rather problematic. Now let's look at the XLE out here again today. Another one blew through the lows, and guess what? It's on a much lighter volume. We got a doji out here, so maybe is this the low? Maybe not. I haven't seen anything in these stocks that tells me that the hedge fund has screamed uncle. Normally, what you're going to see, and maybe we see it tomorrow, going into a Friday, is just, they'll just hammer it, maybe $2-3 down on crude or something, and intraday, and wash everybody out. By the end of the day, it's back up to 48 or something. And that's normally a good sign that the hedge funds have been blown out and they've run all the stops. I just haven't seen that. Would hate for this doji to indicate this was a halfway move down on the total move. That would take you, what, to about 60 on the XLE, which is possible. But probably I think we've got a little bounce coming here maybe next week. They'll probably take them to the cleaners tomorrow if that story is true on them trying to wipe out some hedge funds in the energy sector and the metals sector. We'll be back in a minute. You still have plenty of time to email me or send or call 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to go right to Mike in Ormond Beach, and I have to apologize. He's been on the long time. But someone's been IMing me, covering up the IM that said he was on the line with stuff like copper doodle doo, copper doodle doo doo, copper do, stuff like that.
Well, I guess you're worth the wait, Dave. Hey, my question is, on this leg down that we've been having on the S&P, do you think we could get down to the 2080, 2090 area?
I think we're going to less than 2,000.
Okay.
But it depends on what your time horizon is.
Yeah,
I'm just figuring that we have some kind of moment where we're down around 2,000 when we see them actually raise the interest rates. So I'm thinking everything points to me something like 1990, something like that. So I think we've got more than 100 points down, and it's not what people that are trading on 5-minute charts are going to pay any attention to. But I've got some long-term positions and started buying September, October, and November puts on many things over a few weeks ago, and I'm just going to sit on them. I think that I've got a hugely good opportunity to see those pay off on monstrous returns.
Okay.
So go ahead.
Yeah, I was looking. I'm in the SDS right now, and I'm ahead, and I'm looking at this trading range that we've been in with the S&P, And, I was just wondering if you thought maybe it might take a pause and maybe go back up and test the top and then go back down.
These markets, I suspect, are trying to run everybody that wants to be short out of patience. And normally what happens is when everybody gives up shorting, then you see this monstrous down day.
Yeah.
And I had a biotech stock that I was short, and out of the blue, it's down $20-25 in a day or something. And you just go, you knew it was coming, but you couldn't say which day. Yeah. And that's kind of the way that this is. It's just going to come out of the blue. You know it's coming. The charts are showing it. And I don't see anything in here that tells me that I've got to worry about higher prices. If it goes higher, I'm going to lose a little. If it goes lower, it's going to go dramatically much lower.
Great.
And the only reason I think that we're not there already was when China dropped, everybody took their cash out of there and ran over here throwing it in big wads of cash at the market.
Mm-hmm.
Now it's all in, and guess what? The market didn't blow through the highs and give them huge amounts of returns again, and now everybody's kind of starting to scratch their heads and figure out what's going on. But to me, it was just one more test of the top that has failed, and until we go through there with some kind of sign of strength, all I'm seeing is this market do what most markets do, which is take a lot of money at the top and frustrate the shorts that have a very short time horizon. And it reminds me of the Indiana Jones movie where he's trying to get in and get the Holy Grail. And one of the tests was only the penitent man will succeed or something. And that's it. If you don't have a ton of patience, if you have very short time horizons, it's probably going to be very difficult to remain short. But I think there's monstrous amounts of money to be made.
Okay. Thank you.
And I put my money against that in the newsletter. So
okay. Thank you very much,
see.
Dave.
They're telling me I chose poorly in the den. But anyway. Yeah, he did in the movie. I want to thank you for your call. We're out of time today. Look for Amazon. Not looking for a lot of movement in it after the bell tonight. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. Don't be like the Chinese. Don't be stuck in a stock for 6 months. Sell now, not later, if you have to sell. If you think you should sell. Anyway, we'll see you tomorrow. Hang on for Tom O'Brien and Andy Copperdoodle-Doo Heck.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.